Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Thursday, March 25th. Okay, coming off a pretty ugly session yesterday, a lot of broad-based selling. Can't really point to any particular reason. That correlation between TLT falling seems to have decoupled, because yesterday rates were falling, TLT was rising all day, which is usually supportive of technology. But yesterday wasn't the case. I mean, they hit IWM hard, they hit tech pretty hard, and while SPY held in there, closing on the lows with a pretty ugly bar the last 2 hours of trade. So let's dive into it and take a look at it. We'll run through our usual names, the indexes and FATMAAN names. Then I want to get into some potential trade setups, specifically looking at China, which has been falling apart, and also EEM that has a setup worth noting. So let's look at SPY here. This downtrend line that we had set up worked great as a line of resistance. We had two touches in morning trade where price had reached up and gotten rejected by the downtrend line. And then once this 391, 391.50 area finally let go, then it was pretty much a flush into the end of the day. You had a level here at 389.50 that was potential support. You can see support here, resistance, resistance, resistance. So that was kind of a, an important level, and you can see that price dropped down immediately down into this area of support here at let's just call it 388, and you'll notice that down below we've got this $1 gap from 387 to 386, and you can see in prior sessions we had two touches of the top of the gap right here, which acted as support. So let's go down to the 30-minute chart to get some granularity. And here's that same downtrend line. You can see here at 392 that posed a problem, and we had a good 2 hours where price could not break above. And like we've always said, when price shows you the buyers have lost power, or it can't take out a line of overhead resistance, that always makes it an objective short. That doesn't mean it's going to work. That just means it's objective and you have a clear line to shoot against. And in my book, that's one of the most important things that you can have, is a line in the sand where you know exactly where you're wrong if price were to pop and take you out. But after it broke, there was no reason to get out if you had gotten short, because then it lost 391, then it lost 389.50 and 388 right into the close. And so here we have our gap. I think that's a good line to shoot against. Now I looked, it was 6:45 as I was starting the video, and I think the Qs were up about 0.4%, but the other indexes, SPY and small caps, were, let's just call it flat. So we've got the gap. We've got this level here at 386 on a gap fill. If we were to come down there and test it again, you would have a line to shoot against long. And also on the upside, if we pop up and recapture 388, you can be long against that, for a tactical trade. But like I always say, if this were to come down and really test that gap again, I would imagine that it would fill. Usually on the first run at it, you'll get that reflexive bounce off the top of the gap, and that's what we got here. You know, we came down, tagged it twice, and then bounced. Usually on, you know, second, third, fourth attempts, it's going to go right through. So if there were a bounce here and then another run at it, I would expect that one to fill. And then, of course, we've got more problems below if that were to break. This is the QQQ NASDAQ 2-hour chart. I don't know what happened to my label here. I must have clicked on it and erased it. But be that as it may, pretty much selling all day. We had a reach up here to 318.67, which is this candle right here. We reached up right into that zone of resistance, and then it let go and then filled this gap. There were several occasions. I traded that pretty well yesterday, but there were a couple of occasions where price had found support and bounced where I didn't really expect it to. But anyways, once the gap broke, it was Katie barred the door. It was, you know, full out selling. I was really surprised that it did not stop right here on the gap fill. It just kept on going. So now let's go. Well, sorry about that, guys. 310 is your next level of support. You know, support here, support here, support, 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 support. So that is a big line, 310. So if there were to be, excuse me, some kind of a kickback, and then they'd make another run at it, 310 has got to hold on this longer time frame, because below that, then you're into, you know, an area of very low volume over price support down in here, and you've got this big gap. You know, bounces aside off at the top of the gap, I think that would fill and then make a run back down here towards the lows. If, that's a big if 310 were to fail. So let's look at the smaller time frames. And what I've done here is I've laid on the fibs from this swing high in the morning to the close. So with 312 basically being a pivot for today, above 312 you can be long. You know, if it were to reclaim 313, that would be bullish. 314 bullish. And of course 315 recapture would be bullish. But with this setup, a Fibonacci bounce into 314, 315 would give you that half-back short entry. Certainly, if there was a bounce back to 315, I would be looking to try an objective short. Back at the top of this gap, prior gap, and into the 50% fib kill zone, I think they would hit it there and at least make another run back to 312. So whenever you've got a nice swing setup like this, put on your Fibonacci's and then look or be aware. You know, if you got long here this morning and, you know, there's a bounce, be looking for those overhead areas of resistance where you can cover. You know, if you see signs of trouble, if price is stalling, and then you, at the very least, can get out of your long. And if you're so inclined, you can flip short against a level. And for my money, that level is going to come in between 314 at the 38% level, or 315, which is the 50% halfback fib. IWM was ugly yesterday. And here's a good example why I leave on prior gaps, you know, because this gap was filled the day before, you know, so I could have taken that off. okay, the gap is filled, but look what happens. We came down and we reached back up. There was a gap up in the morning. So there was, a gap below. It reached all the way up and tagged the top of the prior gap as more or less, a double check right there. And then it fell away, filled the morning opening gap, and then let go. So, if you were actively trading it, let's look at the 30-minute chart. If you were actively trading this, you would have marked your morning opening gap, right? Because gaps get filled. And then it came right up into this area of resistance and then was rejected. So that was an objective short there at 221. And if you got that, there was nothing left to do the rest of the day. There were no, shakeouts or wild candles. You could have just stayed short the whole day long, finishing right at the lows. And so what I've done here is exactly the same thing as I did on the Qs. Dropped on the fibs, and I will be looking for areas here for possible, definitely for overhead resistance, but possible rejection areas where you can put on a half back short, something like that, a bounce into 215 right here at the 38% level. That may be an area, but definitely 217, just above the half back in between the 50 and 61.8 where this technical resistance lies at 217. That's $5 from there. So that's a healthy bounce. But right into that area, right into the midpoint of this downtrend channel, that would be an area that I think would be really objective to put on another short. And let's jump back here to the 2-hour just for a second to show you something. I have this uptrend line. We've got an area of support at 210, but then we get into the 207 and the 205. So, look for a kickback that gets rejected. And if this breaks here at 213, 212 area, we're going to come down to 210 and probably even 207, 205. So before I get into the Facebooks and Apples of the world, if you're new to the channel, I really appreciate the time this morning. If you find the levels and the commentary helpful, hit the subscribe button and the alarm bell. You'll get all my content. And then over in the show notes, you can visit the blog site with some links there and register for my content. You'll get midday updates and really any content that I send out during the day. You won't miss a beat. Longtime listeners, I really appreciate you being along for the ride. I appreciate the comments and the ideas. I will get to those soon with the coverage that you requested. But in the meantime, please hit the like button and pass the link along to somebody in your trading circle that may benefit from it. I would really, really appreciate that. Leave me some comments below. Leave me any ideas you have for coverage. I will get to those as soon as I can. I love to provide content that my listeners are looking for. So, yeah, I appreciate that. So let's get into the market leaders, if you will, at least in terms of market cap. The way FATMAAN goes is the way the market goes. So let's take a look at it. What I've done here is zoom out to Facebook, and there's a particular reason why. We had been in this $30 trading range between let's call it 250 and 280. We recently had the breakout up to this 293.50, which had posed a problem in the past, and it was rejected there. And now we're coming back into 280. That is a very, very important level. Why? Because once you break out, you're not supposed to come back. It's fine to come back for a back test, but that back test has to hold. And if it doesn't, if price were to somehow come back in here and start getting into the, the 279s, the 278s, the 277s, the technical target then becomes the bottom of the prior trading range. And so just as this was a great long towards the bottom of the range, back up to the top of the range and breakout, if this were to come back in below 280, that makes this look like a fake breakout. And that's one of the most bearish things that can happen, is a fake breakout. Then all these people here are saying, oh my God, I was wrong, right? When the back test doesn't hold, and then they start exiting their position, and then that's fuel to the fire for a downside move. And so watch that 280 very carefully, whether you're bullish or bearish. That is a very, very, very important pivot. Apple, it's pretty much been dead money. We had this scenario pretty much pegged. Yesterday came up here. High of the day was 122.90. A reach back into this pivot that failed, and then it was off to the races to the downside. Not a tremendous move, $2, but then it closed below this 120.50 area that has been a pivot in and of itself. So now with it below, I think it's got to really hold 120 and then recapture 120.50 for a potential run back up to 123. But that remains to be seen. On the downside, we've got this 250 gap that needs to be repaired. I would not be surprised if price somehow finds its way to revalidate this low, fill this gap, and then decide where it goes from there. Tesla, got two charts for you. Daily chart, where you can see 650 is a really, really big pivot for Tesla. This was an area of the original breakout. Right here, you can see it. Boom. We came back, undercut that, made a reach down towards the 200, recovered it, but now looks like that H pattern. Here's the tall part of the H, here's the body of the H, and now we're back below 650. I think on the daily chart, if it can't recapture 650, it's in real trouble, and I would anticipate coming back here to the 200 to test that again. And if the 200 fails, then all bets are off. But now price is below the pivot, below the 8, 21 and 50-day moving averages. Nothing but bearish. And here is a really important sign. Look at how weak the momentum bounce was. It really didn't even hardly do anything. And now it's starting to roll over again. So I would be, if anything, leaning bearish. And if you're a Tesla bull, you got to recapture 650. And if you can recapture 650, you would have a nice objective long there on the daily time frame. Here on the 60-minute chart, you can see there was a line of support here around 635. It closed below. Now 625 becomes important. There was a level right here in this prior low. So that's support here at 625. Below that, you're coming down to the gap at 595, and will most likely fill that and come back and double check these lows down here at 560. So still a lot of downside left on Tesla. Microsoft, I drew in this what looks like a bear flag to me with a breakdown. We had these levels well defined yesterday. There was a gap there, and that gap got filled. And then this breakdown here. I wouldn't short it here. I think the main level remains 235. Below 235, the bears will probably, lean on it to a certain degree. Probably push it down here towards 233, or this gap that still has yet to be filled. But above 235, I think the bulls are still in control. Amazon Free 50 Club delivered. We had a push above 3150. It failed, and you got to move down to 3090. So that gave you the free $50 move that has been working almost on a daily basis. If you are dialed into Amazon or want to be, these $50 levels have been pure gold. I mean, it speaks for itself. Price opened below at 3140, pushed up, failed, and then rolled over, and you got the $50 move back to this $3,100 pivot. So just keep running the same playbook. 3150. If that is recaptured and it's a bullish bounce day, you can be long on the recapture of 3100. If price comes up to 3100 and is rejected, you've got an objective level for a short. And if things fall apart, I would expect a move back down to 3050. So that's how to play that. Google. It wasn't so much the percentage, but this is a concerning look. You had what looks like a bear flag to me, and it dropped out of that flag. Now it's down below 2040 in this prior trading range here. In order to have any kind of bullish positioning, it's got to recapture 2040. Otherwise, down to the bottom of the box at 2010 is the way I see it. So if it can recapture 2040, you can be long and look for 2050 or higher. But below 2040 looks like 2010 to me. Netflix. We had this one pretty good yesterday. You had to be fast. We had the pivot at 535. It spent a brief moment there, but then let go and filled the gap that we had, finished on the lows. So now this 517.50 becomes a key level because, if that were to break, then you're coming down to 505. This is an area where I would look for it to bounce today. If it can recapture 522.50, you can be long and look for 530. Now, if you've been following along fairly closely, I've adjusted these levels. I tweaked them a little bit. I think they're a little bit more accurate than what they were before. And what you can see is, 522.50. That was a key level here. That was the bottom of this gap. So support, break a support. I think that's a good level. Here it was support as well. So I think 522.50 is better than what I had before. Here I had 535, but I've tweaked it down to 532.50. You see here a cluster of support. Here you had some resistance, and so I think that's better. 542.50 here was our most recent high, and then 552.50 was this big level in here where this was all support right here, and then this was all resistance. So if and when Netflix comes back up, 552.50 will be a good level to watch. TLT closed on the highs. We've got that 7-year auction today at 1 p.m. That'll be critical. Notice the positioning of the 20 EMA right here at the bottom of this trading range. So 138, and the 20 at 138.56. If the auction goes really well today and there's a bid in treasuries and TLT can pop the 20, then I would expect a run up here to 141. If there's a rejection here, if this auction is a disaster like it was, I think it was maybe back here. I'm not sure what the day was, but there was a day in here where there was a whoosh down on that 7-year auction. So this 138, 138.50 level is important. So watch that. ARK, Kathy Wood's Innovation Flagship Fund. I've got a line of support off of the most recent low. We had a tag here the other day, and now price is pressing here. I think a break below, 121. Is that right? No, I'm sorry. I did not have that refreshed. I apologize. Because I got short yesterday or the day before, and I was like saying that is not right. So I apologize about that. Had this line of support. It broke along with, this is a proxy for Tesla and the bubble stocks. So I think your next target for the ARK fund is 110, and below that, there's a lot of air. So I'm short. I'm looking for 110. We'll see if we get it. But right now, there's not a lot of, technical support. And actually, I don't even have this gap in here that goes all the way down to 110.50. So I think ARK has further to fall, and down here at 110 would be an objective place to at least be prepared to cover short and potentially go long. Let's look at China a little bit. Chinese tech has been getting incinerated. Here's KWEB, the ETF for China e-commerce, internet stocks, and you can see here that we had a big move and now a back test to both the 200 and technical support. If the selling pressure increases and price cannot hold the 200, I think it's coming down here to 65. If you get a bounce up and then, it rolls over again and, fails, I think that's a nice short at, let's just call it 75, 76, right in there. I think you can get or see a $10 move. And here's a nice example of that H sell setup. Here's the long leg of the H. Here's the bounce, the body of the H, and then the rollover. And you can see here how well the declining 20 and 50 acted as resistance on the bounce move. BABA coming up on a really key level here at 225. We had talked about right in here having that bullish divergence, which is true. It did have it, but the bounce did not really amount to much. And now it's coming back down to this key 225 level. If that were to break, there's one last chance down here at 215 to save it. But other than that, that would be very bearish if 225 were to fail. Now, what I've done, and is what we talked about before, I did not take this bounce play. I wanted to see price prove that it could recapture all these moving averages, and I put an alarm at 250, on a breakout of this downtrend line and a break back above the 200. So now I've got a downside alarm set just below 225 for a potential short. And let's wrap up quickly with the emerging market ETF, mostly a rocket ship off of the 2020 March lows, right up here to 58, which has been a multi-year high, if not an all-time high. I'd have to check on that. But now it has rolled over, lost this line of support, and broken trend. In this gold, I've put in the Fibonacci retracements, and you can see that even a simple 38% pullback brings it into 48. If there's a halfback, a halfback move, it's into 44. But you can see high level bearish cross on PPO and a trend line break on RSI, looking to move below 50. So I think there's going to be a little test here at 50, but I think at a minimum, I think if you wanted to get short against 53 on a weekly closing basis, remember this is a weekly chart, so I think you can be short against 53 and look for 48 at a minimum, and potentially 44, where there was this breakout. And this is a 4-year chart, so there was a high back here at 48, and then there was a breakout here from 44. And remember, that halfback move is so common. I would not be surprised if we found 44 and then buyers stepped in on that halfback retracement. Also, you can watch the rising dollar. That is not good for EEM, and recently that's what we've had, a rising dollar. So you can track the dollar's move along with EEM, and you'll see a fairly good correlation there. Okay, let's wrap it up. Bad day of selling yesterday. We'll see if we get a bounce today. Watch those Fibonacci retracements for potential recycle from a bounce long into a resumption of the downtrend or selling. Trade level to level, recapturing levels from below is bullish. So while you may see that downtrend line, bounces do happen and they can go farther than you expect. So keep that in mind. Have a good day of trading. And I think one thing that I want to point out, watching 10 names, the indexes, that's 3, plus FATMAAN is 7. That's 10 charts to watch. You can make a good living trading 10 stocks intraday. You don't have to look at 50 or 100 names trying to find that setup. If you play level to level and you're an active trader, watching those 10 names, the indexes and FATMAAN, will give you plenty to do. And if there's a name that's dormant or several names that are dormant, go find 2 more. But I think watching names very closely and having those levels nailed, you'll do really, really well. And that's why I spend a lot of time trying to point those levels out to you so you can focus on your execution rather than hunting stocks all over the place for active trading. So this has been Chris Buss with Traders Profit Compass. Thank you again for listening, and talk to you next time.